Look, it's a great question. And I predicated my statements by saying this isn't a Democrat versus Republican thing. As you just pointed out on Fit 21, 71 Democrats voted for it. Actually, frankly, if there's any party that philosophically should agree with getting out crypto to the people, it's the Democrats, right? I mean, these are the people that have always believed in push the power back to the people, right? They believe they're open for freedom, etc. Party alignment is strong.
Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and with me today is Mike Belshe, who's the co-founder and CEO of BitGo. Mike, great to have you back on.
Always good to see you, Tony. How are you?
Great, Mike. I always love speaking to you because of your web pedigree, Web 1.0, 2.0, and you have just a great perspective on technology and the markets. Let's start with BitGo. What's new? Any clients that you can highlight? Anything cool that you guys are working on?
Well, thanks, Tony. It's always a pleasure to be here. You do a great job covering the space. Look, the industry moves at a million miles an hour, and BitGo is no exception. Been really happy. We've been growing the team considerably this year, just on all the new initiatives that we have. One of the things you might have heard about is Go Network. Go Network is finally connecting the ability to post-trade settlement, all within qualified custody. Pretty much every single one of our institutional customers needs this. They've been doing various forms of, on-chain, self-custody. I'll call them hacks. And while that works great for individuals, when it comes to businesses, they really can't be holding their own keys. They don't want to hold their own keys. They know this. So we've spent a ton of time. We've got super fast withdrawals straight out of cold custody. It's in qualified custody all the time. And the reaction that we had, a couple of years ago is like, well, I got other operational processes, et cetera. But this year, the tune has really changed. And so people are really excited about that. Other than that, the bull market carries everybody. We've expanded our trading offering. We've expanded our custody offering. And, we're pretty much kind of at all-time highs, I guess, for the company in terms of how things are doing. The ETF markets have helped. Obviously, we're custodying a number of those. Some of them you haven't heard about yet, which are coming as well, but it's looking good. And then lastly, we're finally getting our full network of global custodians together, or fully operational, I should say. It takes time, to get the regulatory clearances for all the parts of the stack. BitGo does a tremendous amount of staking, for instance. We spend a lot of time with regulators understanding what it means to be doing staking from within qualified custody. Of course, we do that in an institutional way that it never has any friction with the regulators, but there's so much confusion about how this industry works that we have to do a lot of time with it. So anyway, Dubai is very close to being up and running. Singapore, very close to being up and running. Our BaFin licensed European entity is already running, and that's been growing very well. It's 100% Mika ready today. Wow. So actually, from BitGo's perspective, we'd like to have Mika go into effect earlier. We went with the hardest regulator. We're in Germany with BaFin. That's like the New York DFS of Europe. But looking forward to being ready for the next wave of institutions. And the next wave brings in the more and more conservative folks. So pension funds that previously couldn't touch crypto because the infrastructure wasn't ready. We want to make sure we've got the infrastructure ready. That's what we're doing. And so far, it's got really good positive signals.
That's amazing. Congrats on the success. Follow-up question on your expansion in Dubai. Are you seeing demand from sovereign wealth funds? That's been, one of the areas a lot of people are interested in because they know endowments are here. They know hedge funds, family offices, high net worth individuals. But a lot of folks have been wondering, where are the sovereign wealth funds?
Well, look, I mean, they've been in for quite some time. So this isn't new, and I don't think it's a surprise. Obviously, tremendous amount of investment from Dubai. I think the UAE in general is a super positive business climate. Obviously that entire region has a bit of a single point of failure within their business acumen, too much on just kind of oil and energy. They're looking to diversify. They are spending a tremendous amount of resources to bring technology that includes, obviously crypto, Bitcoin, et cetera. This includes AI and things like that. So the regulators there, we find, are very much trying to understand what the issues are, how they can provide great service. I think they've got a real opportunity to become like a global hub of finance over the next 10 years. They have a great attitude.
For sure. And do you feel that once we figure out some of the legislation and regulations here in the US and there's clarity, some of that business in these other parts of the world will come to the United States, maybe some that have already left and they may come back?
Well, look, I mean, crypto is still relatively small, so the amount that's left, I think, is also relatively small by definition.
Sure.
The U.S. owns the markets, right? It is ours to lose. We have the most stable markets. We have the strongest legal system. As long as we continue to provide stable currencies, like a reserve currency that everybody can trust and understand and use, as long as we continue to provide a legal backdrop that provides a fair and understandable business climate, we will win. And this is where like the current events are so troubling. I mean, obviously on the US dollar side, sanctions controls, I understand the need for politically to have sanctions, et cetera. And of course, we fully abide by that. But the US needs to be very careful when you tell the world that you might take away their money and use it to fund their enemies in some cases. If you go afoul of U.S. policy, you're telling the world like, hey, you need to be really extra careful about using U.S. dollars as a reserve currency. Further, on the law front, whether it's the SEC or other, when we make it difficult for businesses to predict how they're going to operate, they won't operate. But the demand is there. Crypto hits, I forget, 50 million Americans today. Globally, it's growing on a daily basis. It's absolutely unquestionable that the people of the world, not just the US, want to have good access to crypto. And the United States has a choice. Either A, regulators, get off their high horse and start working with business to figure out how to bring it here. And, it may have faults to do that. It may seem uncomfortable for others to do that. I tell you, BitGo is here to help make it work well for regulators. Coinbase is as well. There's a bunch of stand-up companies that are really working hard to make it so that regulatory needs can be met. But if we do that, we can bring all the business here. We can do it over an iterative period. Get the business here first. And there's two things. I mean, people worry about, like you said, U.S. money leaving the U.S. to go find better regulatory environments. But don't forget, there's also the opportunity to have all of the world's money come to the U.S. markets. Right. And as long as we don't have our act together, I give specific examples as we go deeper. I know you want to talk about SAB 121 and stuff like that. But if we don't get our act together, that money doesn't come to the US, which otherwise, right, by default, we have the strongest, best, safest markets here today. It's ours to lose.
Yeah, absolutely. And on that note, with SOP 121, I want to get your thoughts. And obviously, your POV is very critical because you're working in the custody business. You're helping to custody for institutions and many other folks. What are your thoughts on the situation? One, the repeal, then Biden vetoed it. And it seems to be still something that's working its way through the House that they may try to get it back up. I know there was the vote to overturn Biden's veto didn't go through, but there's some bills that may solve it. But what's your take on this entire situation?
Look, I think there's been a coordinated effort from the Biden administration to lock down crypto. And SAB 121 has been what they've put in the front as kind of the lightning rod for attention. Look, Gary Gensler, at the SEC has been controversial in crypto, certainly struggled on a bunch of fronts. By creating SAB 121, they continue to put the lightning rod on him. But SAB 121 at the end of the day is a sideshow. It's not the real issue. Now, before I go deeper, I want to make it clear. I don't think this is a political issue for Democrats versus Republicans. This is a political issue, but it's individuals, and there's only a few of them. So Joe Biden has made it very clear he is anti-crypto. Elizabeth Warren obviously is on that list. We've got Brad Sherman. We've got Maxine Waters. We've got a few people here, right, that are bad apples. And, by the way, there's a geriatric problem with all of these guys not understanding technology as well, which is interesting. But we'll leave that for somebody else who's more expert on politics. when it comes to SAB 121, I think they've consciously decided to make it look like it's all the SEC's fault. But actually, that's not the big deal, because even if we repealed SAB 121, the traditional banks would not be coming in on crypto. And that's because there's actually three agencies that matter. And the SEC is probably the bottom of the list. It's certainly the bottom of the list when it comes to supporting Bitcoin as opposed to other types of crypto assets. So what I mean by that is the three agencies that matter is the OCC, the FDIC, and the SEC. And I would rank them in that order. So the OCC is the Office of the Comptroller of the Currency. And remember, under the previous administration, Brian Brooks was the interim OCC comptroller. And under that administration, they made it available that crypto there's a path for traditional banks. This is Bank of New York Mellon, this is State Street, this is JP Morgan, et cetera, to be able to custody crypto. And of course, if you want to de-risk this industry, the number one thing you should do is go and list the guys that are the experts in risk, right? So these are the biggest institutions of America. They know how to do it well. They absolutely should be invited into the ecosystem. And Brian Brooks made that possible. Then we had a new administration under Joe Biden come in, and not a single law was changed. Not a single regulatory written word was changed. And yet all of a sudden, the new comptroller of the currency, and this is interim comptroller Michael Hsu, had a night and day, black and white, completely opposite interpretation of the exact same regulatory and legal constructs. Now, if this doesn't piss off Congress, I don't know what should, because they have been made completely impotent by the administration. And I don't believe that this makes good business. What do we want in America? We want to have businesses have a set of rules to comply with. You can agree or disagree with them, but they shouldn't change just because the president switches seats, right? Something written should have happened, and yet nothing was written, and yet the policy went completely in a different direction. This is a real problem in the United States. This indicates that the U.S. may not be the bedrock of stability that it once was when it comes to law. All right, so anyway, Office of the Comptroller of the Currency absolutely is the gateway. They claim safety and soundness issues with regard to Bitcoin and digital assets, and they will not allow any federal chartered bank today to touch crypto. So that's a problem. Now, even if you get past there, and there's some good news, we've got federal powers versus state powers. There's a whole bunch of state-powered banks that are not governed by the OCC. They are not regulated there. So look, a bunch of state-chartered banks are absolutely in on crypto. And for the most part, that does give us still some avenues into the banking system, which is critical for building a great ecosystem for the new wave of finance. But introduce the FDIC, also a federal agency. So obviously, pretty much every bank in America wants to be FDIC insured. And that means they are subject to the scrutiny of the FDIC regulator. FDIC regulator, what's his name? Starts with a G. He might be retiring. He's pseudo-retiring. Anyway, he's been absolutely negative on crypto for quite some time. In April 2022, he came out and said, Gruenberg, sorry. Yeah, that's his name. He came out in April 22 and said, if you guys are touching crypto, any of my regulated entities, if you're touching crypto, I'm going to put you on extra scrutiny. I need more documentation. I need to know exactly what you're doing. And basically what he did is said, if you get into this part of the business, your life is going to get harder. And every bank had to make a choice. And look, they're trying to run businesses just like everybody else, and they want to participate in the future and what's up and coming. Of course they do. But they've also got their mainline business in traditional finance. And do they want to take on that battle? So a number of state chartered banks have dropped out as a result of the FDIC. And then the guy I ranked third is actually the SEC. Now, the SEC is critical if you're launching something that somebody might determine as a commodity. I'm sorry, a security. Bitcoin, has pretty much already been declared a commodity. I think ETH has now gotten a pass as well. I think it's now officially a commodity, even though it kind of went up and down for a little while. So the SEC is important for information disclosures, et cetera, if you're building securities. That one's still getting sorted out. It looks like increasingly tokens sold as tokens are not securities. It doesn't mean that they couldn't be sold or packaged into security type products,
Right.
which the SEC absolutely has purview over. But in general, anyway, they'll sort out. So SAB 121 is down there. As you know, the FIT 21 bill, which starts to do much more interesting things for crypto, which is introduce regulatory market structure, which would actually greatly expand the safety and stability of our markets that we trade on for crypto. It also effectively neutralizes SAB 121. So anyway, sorry that was so long-winded, but I think it's really important for people to understand, like, who are the federal agencies that matter. And it's interesting to note that when a new administration comes into power in the United States, he pretty much immediately puts new people in charge of all of those, right? So really what it comes down to is whatever the president says goes. And this is why in this electoral cycle, it's so important to think if you are a crypto voter, you have to be voting for a president that's going to support crypto. Unfortunately, the current administration just isn't it.
Mike, that's great insight, because I didn't think about the OCC and FDIC. Everyone had their targets set on the SEC, but it's great context that even if this was resolved from an SEC standpoint, you still have these other two hurdles. A quick follow-up question, though, on the handful of people, and aside from the geriatric layer, why do you think they are so anti-crypto? Because even the younger Democrats in the House and some in the Senate, joined with their Republican colleagues to repeal SOP 121 to pass the FIT 21 bill out of the House. But you have these handful of folks, and I'm scratching my head trying to figure out, is this a currency control issue? Is it we can't properly understand or tax this, or we don't control it? And that's why there's this, okay, we're not going to allow it. Following Biden, Elizabeth Warren, Brad Sherman. Why do you think that is?
Look, it's a great question. And I predicated my statements by saying this isn't a Democrat versus Republican thing. As you just pointed out on FIT 21, 71 Democrats voted for it. Actually, frankly, if there's any party that philosophically should agree with getting out crypto to the people, it's the Democrats, right? I mean, these are the people that have always believed in push the power back to the people, right? They believe they're open for freedom, et cetera. Party alignment is strong. So the fact that there's a few, that don't like crypto in Congress or in the White House shouldn't be surprising. I mean, of course, there's different points of view out there. Now, the individuals involved, look, I do think that age is a problem. I think they really have a hard time understanding how new technology is going to affect the world, and they're just afraid of it. And I think this is something that, is not specific to these individuals. I think it's a human nature thing. You and I are going to go through it as well. As we get older and older, we will also become a little bit, grumpy and befuddled about whatever it is that's coming next. It's kind of our destiny. All right. Unless we live forever, I guess, and then maybe if we get that technology, we'll be okay. But these individuals also happen to be a little bit farther on the statist curve. So there is a group of people that believe in the absolute power of the centralized government, and they think that what's best for the people is for the centralized government to have control of all things. And it's very interesting that when it comes to money, that is the number one way that you can control people politically. One great example we saw was with COVID-19. We had the truckers protest.
Right.
And this, of course, was in Canada. But Canada and the US are very similar here. And Canada came out and said, we're going to freeze the bank accounts of the truckers that are protesting. I mean, this is an incredible thing to do, right? You're going to attack somebody's finance, the livelihood of not just them, but their families, based on their political viewpoints and their desire to protest against a government that they disagree with. I mean, certainly the good news is that was in Canada, not the United States, but it's absolutely antithetical to what I believe every American patriot believes in. So look, some of these folks that are status level people, they very much want to have the dollar continue to dominate. These are not financial experts. They do not understand free markets per se. They do understand control, and they're afraid that Bitcoin will take away some of the control that they have today with the dollar. It's true, Bitcoin will. So they should be afraid of that if that's what you're really afraid of. But if you are actually for the people, if you actually want the people to have power instead of the banks to have power, then of course you should believe that people should have the right to access to money. They should have private access to money. You shouldn't be judged based on your transactions. The government shouldn't be able to supervise all of it through a CBDC. These are just very basic things if you want to really give power to the people. So, all right. Anyway, we've got at least 3 different factions we've talked about right here, right? We've got some at the federal level that want to increase federal powers all the way up to centralization and statism. We've got those that believe in strong federal powers, maybe not quite as extreme. And then the third, where should the state powers be with regards to banking? Should the FDIC really have this ability to overlay and influence all of the state banks, preventing them from being able to compete in business, whether that's crypto, whether that's gambling, whether that's, whatever your other unsavory political topic may be.
Mike, as crypto continues to get adoption and we're seeing it become ubiquitous in politics and TradFi, it's everywhere now. I think I zoom out and I think, are we in one of these major inflection points in history, kind of like the printing press, right? Where it kicked off just this whole new world and democratized things and obviously with money and the movement of value with crypto. And I'm like, I wonder what the world's going to look like in 100 years, that these people are fighting so hard. But we know disruptive technology always wins. They may put up hurdles, right? And they slow us down. But throughout history and civilization, disruptive tech always wins. It's just fascinating. I feel like I want to write another book about it.
Look, technology has a way of just winning, right? I mean, it makes things more efficient for us. It makes our lives better. And if the technology has value, it will win. When I was creating a protocol called Speedy, which is what eventually became HTTP 2.0, in the early days of starting to deploy that out and garner support to make it an actual standard, there were a lot of naysayers, and people are like, Mike, Microsoft's never going to do this, because I was at Google when I did that. There's too much infrastructure that has to be replaced, et cetera. And what I always said in response is, I said, look, if we don't make the new version so much better than the old version that people aren't willing to take those costs to do the upgrade, then we don't deserve to be the 2.0 version. It's not worthwhile. So actually, some of this I would throw back to the Bitcoin and digital asset ecosystem. We still have a boatload of work to do. I know there's a lot of people that are, making a lot of money on early tokens, on early projects. There's a lot of exploration. It's global. It's definitely changing the way people think about money for those that are involved. But we have to make it even easier to use.
Yeah.
We have to make it even easier to keep secure. We have to make it more private. For most kind of non-technical, normal people out there, this idea that you put your transactions on the blockchain and then they can be traced by almost anybody. Look, I think this is a real problem. And, part of this gets back to regulatory. Like, the regulators have told, BitGo and other companies that they don't like privacy coins. They think that they are solely for the purpose of, defrauding the government or drugs or whatever. Look, that's not true. People have the right to the freedom of money. And we have seen persecutions that happen when people are able to trace and infer, often wrongly, ideas about other people's transactions. So, all right. Anyway, there's no stopping this technology so long as we continue to provide enough value that this is so obviously better than the system that came before it that people will move to it. And we're not done. We got a lot of work. I would like to rally, another million developers to come into the crypto space to really work on these problems. I don't mean just issue new coins that are going to be a token, et cetera. Like, really solve the problems that matter for people with money. And if we do that, of course, it's unstoppable. I think it's unstoppable anyway. Maybe I'm just asking, I want the pace to go a little faster.
Yeah. No, that's a great point. And I've been talking a lot about that, how you bring in the next billion people and you got to eliminate as much of the friction as possible, make it feel like Web2, but it's using Web3 technology, where it has to be simple enough where my mom and dad can do it. But I don't think it's there yet, but like you said, we need more developers to come in, more people to bring their ideas to the table and start building.
And frankly, we do need traditional firms that have not been particularly innovative, but we need them to be able to participate as well.
Mm.
Obviously, they aren't going to be on the cutting edge, but they will be adopters that take the pieces that are already working and turn it into real products. The ETF, the Bitcoin ETF, is an example of that. Derivatives markets, clearly an example of that. Can these guys come in and start to help with custody and basic banking, on-ramps and off-ramps? Of course, they can do all those things. And then we can start to really focus on how do you have a world that's got a combination of, you can have your assets custodied at a single bank. You can have them custodied at multiple banks at the same time. Like multiple banks are required in order to authorize certain transactions. We can have self-custody side by side. I mean, the options and potential is limitless. But yeah, we need everybody to be able to participate.
That's what you just mentioned there with multiple banks custodying your assets. So would it be kind of the splitting of the private keys, maybe into 3, 4 parts?
Well, as you know, I mean, BitGo pioneered multi-signature technology back in 2013. Look, we didn't invent it. I don't mean to take over credit, but we were the first to really deploy a solid 2 out of 3 multi-sig system. And the whole idea is that there's no single key that can get compromised and you lose all the money. As of today, we do multi-sig and smart contracts. We do threshold signature MPC. We do a whole bunch of technologies on different blockchains. And absolutely that should be used. And once that's used, and then you standardize the format for how each of the key shares or the key parts are accessed, then you can start to distribute them. So today, people are used to this idea, I bank at Wells Fargo or I bank at Bank of America. Right. Now imagine you're banking at Wells Fargo and Bank of America. And for a lot of purposes, that might be overkill. Like, for your regular checking account, which has got a small amount of your funds that you're kind of using for your day-to-day bills, you probably don't need something so crazy. But for large amounts of money, for sovereign wealth funds that you mentioned earlier, for the reserves of the governments of the world, which is coming, right? We already have it in El Salvador. Some presidential candidates are saying they might put Bitcoin on the US balance sheet. Yeah. Those are going to be large sums of money. And then you're going to want to, of course, be able to do that. By the way, this is what BitGo's doing. It's part of why we have 7 licensed custodians around the world. Imagine a world where you come to BitGo, you sign up for your wallet, you're like, I want a key in Switzerland, I want a key in Germany, and I want a key in Dubai. Oh, and by the way, I want to have the administration of that custody, the qualified custody, out of the United States. So we can actually build these things, and that is what we're building. So it's incredibly powerful. All of a sudden, the ownership of money is no longer subject to the failure of a single entity, and it's no longer subject to the failure of a single government. Now, by the way, one last, I often get a question about that. They're like, well, Mike, but don't you control all of those trust companies? It's a fair question. Look, over time, it'll open up across multiple custodians. But even now, the thing that people need to know, when we open up a licensed regulated entity in Dubai or Singapore or whatnot, the regulators there absolutely care about the autonomy and self-sovereignty of that entity away from BitGo, United States. And so while it's true, I am the CEO of the overarching set of companies, each one of those, I have zero access to keys, goes through a number of independent controls, teams on the ground in those regions that absolutely have a regulator that they report to as well. So no, it is not possible for BitGo to just say, hey, we're going to take across all those. Anyway, I think it's a huge innovation. I think we're the first to do it. It's coming, and this is going to be good for everybody.
Yeah, absolutely. And I love it. I as you're saying that, the smoke, the engines are turning in my head, like what that would look like. So that's pretty incredible. Question on the Ethereum spot ETFs. There's news yesterday that broke that we're going to see the approval next Tuesday. Are you working with any of the issuers? Will you be custodying ETH for any of them?
Yes, we will.
Are you able to name drop?
No, I don't want to. I don't want to name drop. Look, I mean, these guys are all going through their own regulatory components. Getting the SEC to approve. They're very careful with their words. BitGo is an approved, custodian for a number of the Bitcoin ETFs already, and this is an obvious, easy one. I think the next step, which is interesting, will be when we get to the ability to have ETFs that can do staking of the Ether. I think that's out for this first round. By the way, we also had kind of a similar concern about the Bitcoin ETFs, right? The Bitcoin ETFs don't take in-kind deposits and withdrawals.
Yeah.
That is a feature that should come. It makes a better market because all of a sudden, the market makers in the industry can really keep that price totally lockstep with the actual market price globally. Without that feature, there's an inherent inefficiency in terms of the arbitrage between the ETF pricing and other pricing. So there's more work to do on the ETFs. I don't know the timeline for these things to happen. I fear that the regulators move probably in intervals of years, whereas companies move in intervals of days and weeks. That's a big spread. We got to fix that, I think, at the regulatory level for the next wave of money to come, regardless of how that is in digital form.
Follow-up question on staking. Obviously, you provide staking for your institutional clients. The SEC, they've said, hey, no staking in these ETFs. They've also been suing different exchanges regarding staking, saying it's a security offering. How are you navigating those waters as a business? Has the SEC approached you guys, or are you in a separate category from exchanges?
Yeah, we do things very differently. We have not had any approach from the SEC, and I think it's because what we do is so clean and differentiated. There's a couple of areas where the SEC gets concerned, right? So it's very easy to create a securitized product. The third prong is a return derived from the efforts of others, right? So if you're managing someone's Ethereum and you're saying, hey, I'm going to keep 20% of it in a liquid pool, and I'm going to stake the rest on this interval, and I'm going to give you a net yield of that amount. That starts to look a lot like a security. I mean, as much as like the crypto industry wants to say nothing's a security, I mean, yes, some things are securities.
Right.
And some of the exchanges have embarked upon that, and I think they actually did create securities. Now, whether that should be regulated by the SEC or not, I think is a different question. I'm probably more likely to say I don't think the SEC should worry about that, but that's the way the law is today. Another example is reward systems. You may know this. Some are creating this clever idea where, like, hey, we're not gonna give you a return on this, but if you deposit it with us, we will give you a reward, which allegedly comes from our balance sheet. But happens to be very coincidentally close to like the on-chain staking yield, or if it's a stablecoin, the bond rate that they get behind it. Okay, I think those are thinly veiled wrappers around securities, or potentially are. All right, what BitGo does though, like, look, we don't pool funds, so we don't take any two clients and put them together. So there's no question about that. And by the way, I think staking pooling is different from the concept of pooling that the SEC has traditionally dealt with. Traditionally, that's about like, hey, two people coming together to buy a particular product or to enable something. I think putting it into a common wallet, omnibus wallets, banks use them all the time. It's not really pooling. It's a method of efficiency for the storage of the asset. But nonetheless, the SEC and the securities world is not clear on this point yet. So BitGo doesn't do it. We never pool assets together. And the yield we get is not derived by BitGo. It's whatever's on chain, and that's what you get. So we don't have any control over it. Oh, one last thing that's really important. When you deposit at BitGo, we don't stake it by default. You have to say, hey, I want to stake it. We work at the client's direction. So as an investor, you tell us what you want to do. If you want to move it from your account here to your account there, we would do that. Of course, we're acting as your agent to do it, but we are not creating a security anyway. So anyway, what we do is a little bit different, and I think it's important to navigate those waters for now. I do think we'll get clarity from the SEC at some point on how to handle staking in a really clean way. But again, like, I do think there's so much change happening so quickly in digital assets that, yeah, the regulators are having a tough time keeping up. I don't think we should be mad at them about that part. I think that part's actually okay and natural. And BitGo and other companies are here to step up and help educate and provide backstops and make sure it gets done in a very safe way.
Yeah, for sure. And I'm empathetic. I've spoken to like Hester Peirce and some of these SEC folks. I can't imagine what their job is like with all the things that they have to deal with. But I guess going back to our earlier in our conversation, the politics of it, right? And we don't want that to be part of it, but at the same time, they have to go through the journey of learning about this and understanding it and working with the industry to provide proper legislation and guidelines. So hopefully we get there soon. Hopefully 2025 is a year.
Yeah, and again, I don't actually think it's as much politics as people want to lean that way.
Hmm.
But I think what we have gotten to is a world where the president has a lot of power that people don't see from a regulatory perspective. And this is because there's a lot of regulation out there and it locks down a lot of business. And as I mentioned before, with just those three agencies, and by the way, I didn't mention the CFTC, I didn't mention the IRS, I didn't mention the FTC. Like the list goes on. It's just that the ones that we're dealing with today is just the first tip of the iceberg part. And then there's a whole bunch more that's still coming. So having all this regulation does give the president an undue amount of power, in my opinion, in the United States. And obviously that, I guess, is a bit of political thing. But the actual act of like who's in president, whoever's in the president gets to control and decide whether these things are turned on or off. And that's why I think it's the individual in that office, not the party.
Yeah. So speaking of that, Donald Trump will be speaking at the Bitcoin conference in Nashville next week. He selected his vice president, and it's JD Vance, who's actually very pro crypto, has spoken out against Chair Gensler, the SEC, and much more. What are your thoughts on that?
Look, I think it's a logical candidate for him. I'm in business, right, and I'm a single issue voter. I have had a little bit of people, as my political choices this round have become more public. People are asking me, like, does that mean that you're, BitGo is da da da? Like everybody that wants to be a client of BitGo should know that myself and BitGo are 100% in on politicians that are going to make digital assets safer and more accessible. And I think that's why people pick BitGo. So
Mm.
I don't want to be in politics. In my 30-year career, I've never had to voice political opinions. I do not want to disenfranchise anybody that might be from the other side on other issues unrelated to crypto. But I also want to make it very clear that I am a single issue voter. So look, I like that JD Vance was put in with Trump. I think Trump is looking very strong. By the way, I also like RFK Jr. He's also been very positive on Bitcoin. And then you can debate, your audience can debate whether they like RFK Jr. better or Trump better on the other non-crypto issues. BitGo is happy to, and I am happy to support both of them. But then President Biden has made it very clear that he is anti everything we're doing, and so of course I have to be anti that. But it's not a broader thing other than what we get hired for, which is to make digital assets great.
Hmm.
Digital
Now,
assets great again? Uh-oh, better not say that.
that's actually a good slogan. I did want to ask you about stablecoins. Stablecoin market is heating up. We're seeing USDC on the rise. Ripple's going to launch a stablecoin. The folks at Van Eck are going to launch a stablecoin soon. I was curious, is BitGo going to do anything on that front? And are you custodying reserves for any of these players?
Well, let's see. I'm not announcing any products, so I guess I won't answer that part of the question. But remember, actually, the repertoire of stablecoins is bigger than that. We got the BlackRock coin, which is out there. We got Mountain Protocol, which is out there. We got Hashnotes USDY.
Yeah.
Paxos just launched Lift Dollar out of Dubai. So I think there's probably 10 more that are on route to the markets. Look, it's interesting. Like if you go back to 2017 when BitGo was getting ready to launch Wrap Bitcoin and kind of, Tether was out there, but other stable coins weren't around. I don't know when USDC came around, but it was about that time.
Mhm.
People were kind of afraid to launch stable coins because the interest rates were at zero. They were going negative in Europe, if you recall that.
Yeah.
And people were afraid, like, geez, well, what happens if interest rates go negative in the United States? How will that stable coin even work? Which is a great question. But That didn't happen. Now interest rates are high, and everybody wants to capture the interest rates backing the USD stablecoin. So look, I think there's a bunch of these, but most of them are going to fail. That we just don't need 20 different types, and in fact, it's painful to convert.
Yeah.
So what it's really going to come down to is which one's the best. And like a lot of things with technology, it's going to be probably more about the ecosystem than it is about the features of the coin. And in an analogy you can make with technologies like programming languages. So for those on your show that are not programmers, you've probably heard of things like JavaScript.
Yep.
You've probably heard of things like Python. You've probably heard of PHP, maybe Perl, if you go farther back. Look, the winners in programming languages, in terms of which ones get used, is not always the best technology. There's something about the ecosystem. Like Perl has been pretty much a despised programming language. I guess it's kind of dead now, so I'm dating myself. But it's not dead. It's used probably in a lot of places. But JavaScript, used everywhere. And I don't think there's very many people that would argue that JavaScript is the greatest language ever. So the same thing is going to come with stablecoins. It's going to be about how do you make it so that the ecosystem can use it. And each one of these guys is taking a very different approach. Those that are going after securities, like the BlackRock type product, well, the only people that can touch it are people that already have access to U.S. markets and securities, right? So it's not going to really penetrate, much of the crypto industry as we know it. It's going to have a real tough time going across borders. Another approach is like what Mountain Protocol did. So they're going to return all the interest down to the holder, which sounds great. And then they're just going to lock out the U.S. markets. So they're going to whitelist and blacklist, and if you touch the U.S. markets, they're going to kick you out. I think lopping off 40% of the global market is a tough place to start. But Americans often underestimate what could happen in emerging economies, and frankly, a lot of those countries probably need it more than Americans do. So yeah, that could be a winning approach. And then you've got like the Paxos approach out of Dubai. Again, trying to make a regulated stablecoin there that returns interest back. So look, and there's going to be many more. I do think that we're going to see change where the idea that Circle can collect all the interest and give half the money to Coinbase, who turns around and competes with the entire industry, is not going to last. It just has to change. It's simply, none of us want to use it. I mean, I do think Coinbase is a good company. I'm really glad that they're in the ecosystem. But the idea of supporting a token that funds my competitor, and I'm not really the biggest competitor, like all the exchanges, of course, are far more directly in line here. And Coinbase competes everywhere. They provide staking, they provide base layer, they provide wallets, they provide exchanges, they provide custody. Okay, look, it's just a tough place to be. So, but lastly, I think it's really important that some of that interest goes back to the rightful holder, and it will. So I'm probably rambled a lot on different stablecoin options, but there's a lot going on, and this is what happens, by the way, when you open up innovation. Right? The banking system has no innovation because it's so locked down on the regulatory front. And here we've got a great, we just listed 6 different models. And at the end of the day, the consumer is going to decide what they like. And that's going to dictate to business which way to go. And the ones that predict it right will win, and the ones that predict it wrong will lose, maybe go out of business. But that's life. Business, you got to make it right for your customers or you lose.
Mike, given your pedigree in Web 1.0 and 2.0, and let's do the analogy with search here. You had Google, you had AOL and Yahoo and Google and so forth in the mid 90s. Then you saw a consolidation of that, right? The ones that went out of business, some got acquired and so forth, and then Google became the clear leader. Do you think the same thing happens in the stablecoin market, let me make sure I phrase this right. There's the Google, the clear leader with the giant share of the market, right? And then you still have Bing and you still have Yahoo hanging around as far as search engines. Is it like that? There's going to be 3, but one is a clear leader?
Like, I don't know whether it's a count of 3 or a count of 5 or what, but yes, of course. And just remember that at the end of the day, computers are tools for humans to communicate. And this is why we have naturally seen monopolies form decade after decade in our space. Going back to the 70s, IBM was dominant. Everybody's using IBM technology. Why? Because everybody's speaking the same language, right? At that point, we didn't have any interop protocols. So if you wanted software to work between two companies, you want to sell it, you wrote it for the IBM mainframes, right? Come into the PC era. I don't know if you recall, but there used to be more word processors than just Microsoft Word. There was WordPerfect and a whole bunch of others. But the center of gravity converged around eventually Microsoft Word, which won. Why? Because when people exchanged documents, they had to convert them from format A to format B, which always had some lack of fidelity. Yeah. It's a communication tool that people use, so it kind of centralizes on a single winner. The same thing has happened with PCs as a usage, just easier to interoperate and communicate both inside a company and out. These days, we have more abstractions, so now you can start to see some cross-platform stuff. Works pretty well at this point. We added in mobile phones. But in each one of these arenas, I think when you really break it down, it comes down to people talking to people. And so with stablecoins, look, here's the analogy. Imagine you walked into, you're in New York City and you walked into McDonald's and they said that'll be €6. And you'd be like, I don't have any euros. And they'd be like, well, that's all we take. And you'd be like, okay, I got to take my business elsewhere. Yeah. The same thing's going to happen with stablecoins. You walk in with, 17 USDC. And if they say they only take Tether, you're going to have to convert it. And that's painful. Mm-hmm. So digital will make it easier to convert these things, but there will always be fees. So yes, I think in general, we will continue to see things converge on just a couple of solutions. And then where there's real value differences, like it could be the US markets differentiate from non-US markets. That's definitely happening today. You see that with Tether and USDC in particular. Maybe we'll see some pockets where like there's certain regions that have big winners that are different than other regions.
Mike, tough question for you. Given the internet adoption curve and timeline, what do you think crypto and Web3 is right now? Are we in 1999? Are we in 2004? What do you think we're at?
Well, I think probably you got to normalize the timeline at all. What is the internet timeline and what is the movement of money onto the internet timeline? Look, I think overall they are similar timelines. The way I would count the internet timeline would start all the way back around 1970, 1971. This is when the first early origins of what became TCP/IP started to emerge. Email protocols kind of through the 70s, you started to see those kind of come to life a little bit. Today, these are all old hat, but that's a full 50 years ago to get from there to where we are today. So if you consider the origin of crypto to be somewhere around 2010, maybe a little bit earlier if you want to credit the very beginning of Bitcoin. 50-year time frame, it's probably 2060. I'd like to think, I guess, as I say that out loud, I'd like to think that things are a little bit faster due to technology that we have. But I think we're going to be gated mostly by humans, not the technology. I think that's what we're seeing right now here in the United States. It's really about human ability to adapt to these new technologies, both from an individual perspective in terms of usability, in terms of security, and then also from a government and regulatory perspective. And remember, the internet did not have nearly the right regulatory hurdles that money does. Money is very established businesses, whereas the internet was kind of just new business. So we're also competing with incumbent players that are not certain about how they will win. They are running into the innovator's dilemma. I think I mentioned that on your show a couple of years ago. But they're going to have a hard time figuring out how do they adopt the new technology without uncomfortably cannibalizing their old business and yet still maintaining the size of their business. So look, I don't know. I think 50 years is not that bad of a range for like how long it's going to take, which I guess means that we're still in the first 25% ish, maybe the first 30%.
Yeah, that's a great take. And I'm thinking, as you said, because we're running on faster infrastructure and everybody's pretty much on the web, maybe it's cut in half, right? Maybe it's 25 to 30 versus 50, but you never know. It's we'll have to wait
Yeah,
and see.
look, I think the technology part is definitely changing much faster, and we've got way more developers, way more power, way more efficient, and you can see this by the plethora of layer one blockchains that are some of them very indistinguishable from others. However, the regulatory side is going to move very slow, and certainly has been. And then we've also seen great innovations as we go. But the internet did this too, right? So initially it was the protocol for how do you communicate, and there was like some chat stuff, and then it was like some news group stuff, and then it was some email stuff. On the blockchain side, we started out with store of value, maybe some payments stuff. We got into smart contract stuff that led to stablecoin stuff, and then DeFi. So we see innovations as we go. The time for all of this to disrupt the existing financial system, yeah, it's going to take some time.
Yeah. Mike, always great, man. I appreciate your insights, your knowledge, and I'm excited to see what's next for BitGo. Thank you so much for joining me.
Thanks for all you do. It's great to have you out there, championing all this stuff. I see your videos on YouTube all the time, and keep up the great work.